Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is November 25, 2024, and it is a weekly markets update. Let's have a look at the news of week 47 and see what are the next trends. Also, please check out my interview with Alexandros Psarianos, Managing Director at Agora Shipbroking Corporation, that was published last Wednesday. Alexandros shared his insights regarding break bulk shipping, its pros and cons versus container shipping, and current status of international market for such shipping options. So, don't miss the jazz! Last week was very quiet compared to the previous one after the Indian tender award and the Egyptian price roll coaster. Most of the producers across the globe are sold out for November and beginning of December. However, second half December volumes are largely non-committed yet. At the same time, demand is still disappointing in all key markets, which doesn't provide any significant support to the future prices. In Egypt and Black Sea, there were no new sales registered last week. Egyptian producers are targeting around $365 to $70 FOB, but European buyers are still on the sidelines. SOCAR and sellers of Turkmen Urea are still targeting around $330 FOB Black Sea, but even sluggish demand is at least for $10 and more lower than that price. Demand in Europe is still subdued, buyers are waiting for lower prices and prolong purchase decision as long as possible. But in the meantime, increasing gas prices push domestic European producers to the edge of their competitiveness, with current estimated cost of urea at $410 ex-warehouse, and increasing. If gas price continues firming, which might be the case taking into account all the uncertainties, European producers might be forced to stop production, and then more imported product will be needed. But perhaps we will see this tendency evolving not earlier than Q1 2025. The demand seemed to not pick up earlier. From the other hand, piling stocks of Egyptian product will need to find home in 2 or 3 weeks from now. Otherwise, another stock clearance might need to happen in December. In the Middle East, producers are comfortable until mid-December, with more than 500,000 tons committed for the Indian tender. They target around $345 to $50 FOB for the second half December sales, but with subdued demand both in South America and Asia, the sales prospects look gloomy for now. Iranian producers reduced offers to $305 FOB last week and $10 more for the next week. Brazil demand at farm level is still lagging behind, and almost 1.9 million tons of urea en route continue pressuring CFR levels. Last week, offers slipped to $340 to $45 CFR, with buyers targeting even lower than that. Similar situation is in the other Central and South American markets. In Ethiopia, EABC closed the tender for 200,000 tons in 4 lots on FOB basis and will evaluate the offers factoring the freight. Aditya Birla provided the lowest offers for the first lot for end December shipment at $355 FOB Oman, and also for the 4th lot mid-January shipment at $359, again FOB Oman. For the 2nd and 3rd lots for end December and mid-January shipment, Fertiglobe offered the lowest from UAE at $379 and $380 FOB respectively. It is unclear when exactly EABC will finalize the tender, including LC issuance. That was a problem in previous tenders, actually. In the US, the market is off-season and barges at NOLA traded around $310 for the short ton. In China, the rumors circulate that slow demand pace and thus stocks build up might push the government to open exports as of April-May next year. However, no official information yet. Paper values dropped again after certain stabilization last week. Continuing sluggish demand doesn't provide any support to the values of next months. Egypt FOB marginally corrected down for December, to the average of $358 and lost another $8 for January valuation. Expectations for February are at the same level of the average $355 FOB. Non-FOB slipped by $9 for December and another $6 for January to the level of $318 average. Arab Gulf FOB showed the most dramatic decline by $19 for December and by $12 for January to the average of $333. Similar level is expected for February. Brazil CFR also lost $19 for December and $18 for January and landed at the average of $335 for February. Ammonium sulfate standard product price in China was supported last week by significant sales to various customers, while granular price continues to be under pressure, mainly due to slow demand in Brazil. About 120,000 tons of standard product was sold in China at the level of $132 to $35 FOB. So, now many Chinese producers are comfortable having placed December volumes and even started to sell January volumes. European buyers are not stepping back into the market massively yet, but taking into account increasing gas price and demand that will inevitably pick up in January and further, might push them to start purchasing. Brazil granular CFR price continues to slip. The offers were heard last week in the mid-150s to low 60s range. And even at this level, traders are waiting for more firm inquiries from the farmers before engaging into any further purchases. Floating volumes also weigh on the market prices. A factor that might help to keep at least Chinese values from deterioration is Indonesian Pupuk Holdings purchase tender for 155,000 tons of standard product to be supplied over 2025. The tender was held on Friday, so today we will have more details perhaps. Nitrates prices in Europe continue firming amid increasing gas price. LAT nitrogen came back to the market with new price for CIN at €300 for December and €310 for January shipment. OCI withdrew from the market last week and is expected to come back this week with higher price idea. European end-user demand now is absent, and distributors feel comfortable with current stocks, so most likely new purchases will emerge in January. In UAN, there is still no demand either in Europe or in the USA. In ammonia, the week was mostly uneventful, while the market is waiting for the new Tampa contract price to be announced sometimes this week. The expectations are mixed. From the one hand, $60 difference versus last contract price and current spot European prices that reach as high as $615 to $20 CFR suggests that Tampa price can be corrected upwards. From the other hand, US demand decreases as the country finalizes seasonal ammonia application. That might bring, on the contrary, downward correction. So, let's see how the situation evolves. At the same time, in Asia there was no activity and nominal prices of Middle East producers stay at the level of 415 to 30 FOB. Most suppliers are sold out for December, so feel themselves comfortable. In phosphates, activity remains subdued overall, only Ma'aden showed activity last week. Indian DAP prices are stable at around $635 CFR. NFL tender that closed on November 21 for supply of 50,000 tons of DAP to the West Coast attracted only one offer from Purefert at $636 CFR, close to the previous levels. Also, last week, RCF issued a tender for purchase of 4 lots of DAP 50,000 tons each, half of it to be shipped to end January to the West Coast and half end March to the East Coast. The tender will close on December 2. Only actual sales were taking place in Pakistan, where a trader purchased 30,000 tons of DAP from Ma'aden at $635 CFR. Another trader also purchased Moroccan DAP for January shipment on formula-based pricing. Availability from Ma'aden might be an issue for December, and partially for January even, due to production being booked by Indian IPL's volume, recent sales to Pakistan, and also demand coming out of Australia and New Zealand. Prices in China remain stable at the level of $615 to $20 FOB. However, most of suppliers indicate lack of export availability until the end of the year. Brazil purchasing activity is still subdued. MAP CFR price is stable at around $635 CFR. In the US, there was also no new activity registered last week. In general, phosphates prices continue to stay elevated, especially compared to the level of sleeping nitrogen prices. Thus, expectation that is widely discussed in the market regarding downward correction might indeed take place, but looks like not earlier than mid-Q1 2025. News of the week arrived from Europe, where EU trade ministers on November 21 called for tariffs for Russian fertilizers imports. A coalition formed by Poland, Estonia, Latvia, Lithuania, Sweden, Denmark and Finland proposed to increase tariffs for imports from Russia and Belarus. 30% tariff level was circulating. Of course, the way to tariff introduction will not be easy, but this is a good start. Obviously, fertilizers is the other added value form of supply of Russian gas to Europe and needs to be regulated in order to support struggling domestic European fertilizers producers, as well as limit Russian ability to continue finance its war machine. So let's watch this discussion rolling, hopefully quickly. Moving to the fundamentals. European natural gas futures continue increasing, now to the level of almost 47 euros per megawatt hour. Further escalation in the war between Ukraine and Russia happened last week, when Russia fired an intermediate-range ballistic missile. This event immediately affected the gas market, increasing the probability of full stop of Russian gas transit through Ukraine as of January 1, as well as EU tightening sanctions on Russian LNG and pipeline gas through Turk Stream. At the same time, LNG regional markets became more and more interconnected, specifically European TTF and Japan-Korea-Malaysia price benchmarks correlation that increased to 90%. It means that LNG volumes are easily going to those countries which pay more in each specific moment. Last week, the market saw confirmation of that, when LNG vessel that was on its way diverted to Europe when TTF price increased. However, closer to the end of last week, Asian benchmark also increased, and this vessel turned back immediately. It shows that the situation in the European gas market is quite fragile this winter season. However, with coming on stream new LNG export volumes in the US, it's expected to stabilize next year. US natural gas prices surged during the week at one-year high amid colder weather forecast, but on Friday fell to $3.1 per MMBtu after information revealed by International Energy Agency regarding ample output next year. The agency noted that US drillers are expected to raise output for the first time since the pandemic next year, amid higher export capacity and global demand for US LNG. Supply concerns in Europe that we just discussed ahead of the turn of the year drove LNG feed gas flows to rise to a 10-month high, limiting domestic supply. Agricultural commodities future prices showed different dynamics for different crops last week. Wheat futures climbed to $5.44 per bushel on Friday, rebounding from a 10-week low, as concerns over global supply and potential export disruptions mounted amid escalation in the war between Ukraine and Russia. The International Grains Council lowered its 24-25 global wheat production forecast by 2 million tons to 796 million tons, citing tighter supply expectations. At the same time, timely precipitation in the US plains helps the crops, and wheat emergence is evaluated at level higher versus 5-year average. Also, weaker ruble helps support Russian wheat competitiveness. And export prices hover at $226 per metric ton FOB, or $6.15 per bushel equivalent. Corn futures fluctuated at the level similar to last week and ended the week at $4.26 per bushel amid strong demand and supply concerns. Export demand remained robust, underscored by a USDA sale announcement of 3.9 million bushels for the current marketing year. Favorable South American weather, along with uncertainty over US-China relations and biofuel policies, continued to limit upside potential in the agricultural space. In general, there were not much happenings in the market over the week, and many traders anticipate short or even full holiday week as of today due to Thanksgiving, so activity was quite subdued. Last weekend will be this week. Soybeans futures slipped further to the $9.84 per bushel amid very positive signs of ample crop next season, especially in South America. Much of Brazil is expected to see a good mix of rain and sunshine into early December, keeping production prospects elevated. Dry pockets that have developed on west coast Argentina are forecast to receive beneficial rains early half of this week. While still early in the growing season, so far South American crop prospects are off to a good start. In addition, with the potential for a strong La Niña weather pattern seemingly low, the odds of record yields are trending higher. If all three, Brazil, Argentina and Paraguay, were able to match their previous record yields, combined South American production would swell to 242 million tons, up from the current USDA estimate of 231 million tons, and up nearly 14% from last year's combined record production. Moving to the shipping industry. Containerized freight index marginally increased by 80 points. Spot rates ex-China increased by 1 to 3% to European destinations, while remained unchanged to soft for destinations in the US. Container lines reported net profits totaling almost $27 billion in the third quarter of 2024, the third quarter of exponential growth for the sector. The third quarter result was a 164% increase over the second quarter this year and more than 8 times versus Q3 last year. The performance in the 2024 is a reverse of the trend seen last year when profits fell through the year as post-pandemic disruption eased. Rates in this year have been supported by disruption in the Red Sea. And demand for container shipping has also increased. The third quarter saw almost 5% year-over-year increase. However, situation in the long run is hazy, taking into account uncertainties of US trade with China. The Baltic Exchange Dry Index lost 14%, or 250 points, reversing the gain of a week ago. This was mostly driven by muted activity in Capesize segment in both basins. In Panamax segment, the week was more active, however, not enough demand to provoke rates increase. Ultramax, Supermax segment again registered a poor week with lack of activity across the globe and rates soaring. In Handysize, healthy activity was seen in the continent, Mediterranean and South Atlantic, while Pacific Basin and US Gulf demonstrated sluggish demand. To sum up, after a nervous couple of previous weeks with urea prices roller coaster, last week was mostly quiet with limited amount of deals happening, and thus price changes. European buyers are still waiting to purchase, however, rising domestic gas prices and production cost respectively might push them to do so soon. Middle East suppliers are comfortable through at least first half of December. Brazil farm demand is also sluggish with a lot of floating imports weighing on CFR prices. As a result, urea paper values soar for all key benchmarks for January and even February. Nitrates demand is very low, AMSUL demand as well. Phosphate prices continue to be elevated in comparison to nitrogen amid stable demand from India, finalization of Ethiopian DAT tender, and sales to Pakistan. However, this continuing discrepancy will be under question in Q1 next year, according to many sources in the market. Gas prices in Europe surged amid escalation in the Russia-Ukraine war, and taking into account cold weather arrival, this trend of price increase might continue. The same factor influenced wheat future price increase, while corn and especially soybean prices were under pressure amid healthy crops results in the US and South America. Baltic Dry index dropped significantly amid subdued activity in Capesize segment, which was the locomotive of index support a week ago. At the same time, container lines operators posted the highest net profits in Q3 this year in post-pandemic period. So, let's see what is next around the corner, but it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.